Hey traders, Raghee here, and welcome to the recap video for Simpler Futures. And I'm calling this video, You Gotta Know Your Weightings. And let's talk about how Apple affected some of the buys that looked to have some promise this morning in the Dow, the S&P, and the NASDAQ. Remember, Apple has a very prominent place on each one of those index futures. And why sometimes we have to acknowledge when a major name like Apple is really not cooperating with the market at large, what that does and to what degree it's going to stifle follow through and how we adapt. So one of the things that we had this morning was it seemed to be some pretty decent strength in the equities futures going into the open. And by the way, the overall structure, when you look at the daily time frames, the overall structure, market structure of the Dow and the S&P are by far the best by way of intact uptrends. So when I have directional bias, when I have clarity on a daily time frame, I want to, even as a day trader, trade in the direction of the overall trend. In other words, if this is a river, I'm looking for where it's downstream. Where is it easy? Where is it going to flow? On the NASDAQ, there's still quite a bit of bullishness, although the market structure isn't as organized. But you can definitely see, while it's been grinding higher, it has been indeed grinding higher. So we want to respect the trend that was and continue to favor that side of the market. And the same thing could be said for the Russell. It's choppy right now, no doubt about it, but there's a certain bullishness, I think, inherent to an index that is going to benefit from the trade war that's still going on and still a quite strong dollar. So it's hard to want to bet against small caps, even though we don't have great structure. Respect the trend that was, and I'll be looking to buy pullbacks, looking to buy exhaustive lows in the Russell. So we have our overall direction. But then here comes Apple. Now, Apple's not going to have the same impact on Russell that it will on the NAS predominantly, then the S&P, then the Dow. But it's going to keep the market from wanting to head higher because this huge weighted name is kind of literally a weight on the market. So as much as we liked the pullback buys, and we actually did nothing but buys. We had clearing range buys across the Dow and the S&P. We had pullback buys on the NASDAQ and the S&P. We favor the long side. I still believe that was by far still the path of least resistance. Again, think, downstream. And the idea here is twofold. How do I, one, compensate for Apple? I've got to reel in my price movement range expectations and look at nearby Darvas levels and look at where the market has been exhausting and not necessarily expect the upper end of price movement ranges. That's number one. Number two is I've got to be very choosy about how I get into the market. I've got to be very choosy about not wanting to be too aggressive after the clearing range, after the opening range, not being too aggressive about momentum, because then I need even more momentum to get my follow through. I'd rather play exhaustion and then bounce. Now think about this for the next 2 weeks. Regardless of Apple's behavior today, we have what really has just become a concentrated summer doldrums the first 2 weeks of August, right after the non-farm payroll. And that's what we're in right now. And I believe it's going to last another 2 weeks or so. And you could definitely see the lack of movement, sort of the lower volume. And this is where we'll start to reel in expectations for larger follow through in these names. So just a quick heads up about how we're going to trade these next 2 weeks, what to do when a big name, a heavily weighted name within your index futures contract is weighting you down like Apple. Goldman's been a culprit for that in the Dow. There's been different culprits. It's not just Apple. Okay. From time to time, we've seen Microsoft or even Amazon take turns being the laggard, Google. So it happens, right? So we want to make sure we understand what the individual stocks are doing to our larger index futures contract. Remember, when we are trading index futures, we're kind of like stock traders. And we're also ETF traders. And in the premium video, I'll dive into a little bit more of the sector watch list and talk about some of the ETFs that I'm looking at, not just now, but going into the latter half, the second half of the year. As I think there's some signs of kind of a cycle top and leveling off in inflation and growth, and where that sector rotation, where that momentum play is going to. But I hope this video has been helpful, kind of getting you looking at different parts of the market in a way where you can look at a small piece, the boat, if you will, within the overall tide, and what you want to do to adapt. And again, if you use the free tools that are available in the trading app store and TradeStation, these tools are available for free on Thinkorswim. These tools are available for free on the TradingView platform. So these are free tools, and utilize the Darvas levels, because once the Darvas level has been plotted, it's because we put in a minor high or minor low at that level. So there's a lot of power in understanding, number one, why that level is plotted and why it could be a significant, in this case, obstacle to more upside follow through. So very cool free tool. Please use it. It's a tool that was developed in the 50s, and we've modified it a little bit for intraday trading. And I think it's a very powerful way to automate support and resistance on your chart. All right, have a great one. I'll see you in the next update.